Hello students, welcome to CR Digital Classes. I'm Hashim Ali Khan. So this platform of CR Digital Classes will provide a number of videos on your subjects so that students can benefit by watching. By joining this platform, they can get a good command on the subject and confidently you can face the examination. Now presently, I'm taking the classes on bills of exchange. I have explained all the details regarding the meaning, features, advantages, disadvantages, and parties. All those things I've already explained in the previous video. Now in this video, I'm going to explain you very important topic that is called promissory note. So what is promissory note? What are the features of promissory note? What are the differences between promissory note and bills of exchange? These type of questions are also asked in previous examination. So in this video, our focus will be on promissory note. Regarding accounting part, the same procedure is there for promissory note as well as bills of exchange. But here, theoretically, there is technical difference between promissory note and bills of exchange. Now, important and frequently asked questions. On this promissory note, very frequently they will ask a theory question regarding what is promissory note, what are the features of promissory note, and very important, what are the differences between promissory note and bills of exchange. This was the questions asked. Now I'm going to explain you the meaning and the definition. The definition was given by section 4 of the Indian Negotiable Instrument Act 1881. Just in the previous video, I have explained the definition of bills of exchange. Now, the definition of promissory note. So, a promissory note is an instrument in writing. Anything which is in document form is called instrument. So, it is an instrument in writing, not being a banknote or currency note. It is not a banknote, it is not a currency note, but it's an instrument in writing containing an unconditional undertaking, not order. In bills of exchange, there is an order given by the drawer to drawee. But here in this case, a promissory note is having an undertaking, a promise signed by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Slight definition, slight difference is there in the definition of bills of exchange and promissory note. There it is an unconditional order. Here there is undertaking, promise. It is made by the maker who promises to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. This is a specific definition given by Indian Negotiable Instruments Act. But regarding the meaning, we can say promissory note is a formal written financial instrument. It's a very formal because it is enforceable by law. That means if any breach on this promissory note, the aggrieved party can go to the court of law to get the justice. It is accepted by law. So a promissory note is formal written financial instrument used in transaction where one party, that is the maker, promises to pay a specified sum of money to another party, that means the payee, at a future date on the demand. That means it is the promise made by the maker of the bill that after a certain period of time, I will make the payment to so and so person, so and so amount on so and so date. So this is the meaning of the term promissory note. So I have explained you about the definition and meaning. Now features. Features of promissory note. This also asked in the previous examination, what are the features? The first one, in writing. As in the case of bills of exchange, same is the case in promissory note. Every promissory note is in writing. There is no oral or verbal promissory note, completely writing. Then unconditional promise. The main difference between promissory note and bills of exchange is there it is unconditional order. Here it is unconditional promise. The person who is making the promissory note will undertake a promise that I will pay so and so amount on so and so date. So unconditional. There should not be any condition attached to the promise. Signed by the maker. Without signature, the promissory note is invalid. It should be signed by the maker. Then certain amount. The amount specified in the promissory note should be certain. It should be clear. The amount should be written in words as well as in numbers. Then money payment. Normally the promissory note is made only for monetary transaction. For money payment, promissory note is made. For non-monetary transaction, this promissory note is not made. Certainty of pay. In promissory note, the name of the payee must be specified. If the payee is not specified, again the promissory note will become invalid. Next, stamped. Certain cases promissory note has to be stamped with law to make it legally binding. It should be stamped. Next is payable to bearer in limited cases. Normally, for bills of exchange, it can be paid to the payee or to the order of the payee or to the holder of the bill. But in case of promissory note, it cannot be paid to bearer. Only in some cases it can be paid to bearer. But for a number of cases, the bearer promissory note will not be there. So these are few features of promissory note. Now the next thing is the differences between promissory note and bills of exchange. This question was asked many times in previous examination. So watch the video, listen the lecture carefully with full concentration. So what are the differences? The first difference is in nature form. The main difference is a bill of exchange contains an order to pay, whereas promissory note contains a promise to pay. So here there is order, unconditional promise to pay. What? Promissory note. Whereas in case of bills of exchange, unconditional order to pay. That's the first very important difference. The second is parties involved. In case of promissory note, only two parties are there. The maker of the promissory note and the payee. That's all, only two parties. But in case of bills of exchange, we have three parties: drawer, drawee, and payee. The drawer, the person who draws the bill; drawee, the person who accepts the bill; payee is the person to whom the amount is to be paid. So two parties, three parties. Next, maker. Who will make the promissory note? Normally, the debtor will make. For example, A is the seller and B is the buyer. The buyer, the debtor, will make the promissory note. So remember, who will make it? The buyer. Whereas in case of bills of exchange, the seller will make the bill. The creditor will make the bill and draw the bill on the debtor or buyer. The buyer will accept the bill and return the bill. So acceptance is compulsory in case of bills of exchange, whereas no acceptance is required in case this one. So acceptance, just now I told you no acceptance is required in case of promissory note. No acceptance, because debtor himself or herself will make the bill, will promise the bill. No acceptance. Whereas in case of bills of exchange, acceptance is compulsory. Without acceptance, the bill is invalid. So these are the differences. Now some more differences I want to explain you. Liability. In the case of promissory note, the primary liability is of the maker, the person who made the bill. His liability is primary. But in case of bills of exchange, the drawer's liability is secondary. The drawer's liability is secondary because primary liability is that of the drawee. If the drawee dishonored the bill, then only drawer, then only maker is liable. So here the maker liability is primary. Here the drawer's liability is secondary if the bill is dishonored. Next one, transferability. So it can be transferred through endorsement. In case of promissory note, only by endorsement the promissory note can be transferred, endorsed. But in case of bills of exchange, it can be transferred by endorsement as well as delivery. So both endorsement and delivery is required. Stamp duty. Requires stamp duty for payment on demand. If the promissory note is demand promissory note, compulsorily stamp duty is required. But in case of bills of exchange, no stamp duty for payment on demand bills. No stamp duty is required. Next one is foreign instrument. In case of promissory note, foreign promissory notes are drawn in a single set. In only one set, foreign promissory note can be made. But in case of bills of exchange, 3 sets are required. In case of foreign bills of exchange, 3 sets in bills of exchange, only 1 set in promissory note. Next, protest for dishonor. So not required to be protested upon dishonor. That means protesting is not required. Notary public is not required in case of promissory note. But here must be protested on dishonor. So whenever bill of exchange is dishonored, it has to be protested. Protested means we have to give the bill to the notary public. The notary public will record the reason for dishonor. Whereas last one, use in trade. The promissory note generally is used in personal loan or simple transaction. For simple transaction or personal transaction, normally this promissory note is used. But in case of bills of exchange, for main large transactions, for trade transactions, here we'll make this bills of exchange. Whether it is international trade or internal domestic trade, we make use bills of exchange. Only for personal transaction we can make use promissory note. So summary. So in this video I have explained you the meaning of the term promissory note, features of promissory note, and the differences between promissory note and bills of exchange. Hope the concept is completely clear. So in the coming video, we'll discuss more on this bills of exchange, then we'll start the problem. So always keep watching from beginning till end. Don't skip in between. Watch all the videos. All the best. I wish you all the best on behalf of SIA Publications.